Hey guys, welcome back to another lesson of price action trading. In this video, I'll teach you how to use EMAs to enter trades. So I was going to make a video regarding how to use EMAs to manage risk, how to use EMAs to move your stop loss. But I thought before making that tutorial, it's important for you guys to understand how to use EMAs to enter trades so that you understand the importance of EMAs. So this video will cover the entry part, and in the next lesson I'll teach you how to use EMAs to exit your trades. Okay, so let's get started. So we are on gold, and I use EMA specifically because let's say when market is creating higher highs and there is no structure around, okay, or let's say it's creating lower lows and there's no relatable structure around, okay, it's very difficult to find a structure near the lower lows. So at this point you can use EMAs to find trades that is in the direction, because at some point what happens is the market, for example right now gold is just making higher highs and it's just breaking all the levels, right? It's creating a new higher high every week. So at this point, if you're feeling that you could have been in a long position, but you can't because you can't find support and resistance levels, you can, but on the very smaller time frames, which is not adhering to day trading or swing trading. So what do? We use EMAs to find dynamic support. EMAs act as a dynamic support levels. So what kind of EMAs act as a dynamic support level? So first what you do is you have to go to add EMA on your screen. All you need to do is go in indicators, look for EMAs, right? Moving average, exponential. And when you add this, what happens is, yeah, two got added. I'll just show you how to set this up. So you add the length. I use 50 and 200 because I'm a swing trader. I like stronger support levels. So 50 and 200 give you a very strong support levels. You can also use 100, but 50 and 200 gives you the sense of direction as well. And it's one of the candle length which most of the time frames respect. So let's say we have a 50 level, right? And the source is close, offset 0, and all of this configuration is going to be same. And all you do is just add. That's it. You can see a rejection right here, right? I'll just delete it because I already have EMA 50 and EMA 200. I do have EMA 20 as well, but I rarely use it. This indicator is for, I used to use this for supply and demand trading. And because the configuration is tricky, I don't remove it. It's just here every time, but I'm not using this anymore. It's just showing you sessions. When does London session starts? When does New York session is starting, or when Frankfurt is starting? So that's there, but I don't use this. Now let's enable 50 and 200, right? So we have 50 and 200 on our screens. You can see this EMA is respected right here, right? And on smaller time frames, it was respected here, and then 200 was respected here, right? So this is how you put EMAs on your screen. And now we'll get deeper with the EMAs to understand price action and to understand how do we enter using EMA. It's going to be one of the most simplest things. And now let's finally begin. So let's say we are in a position where the market has just started moving up, because that is what we are looking for. Else we have support and resistance levels. For example, this was a resistance level. We saw a breakout. Once there was a fake breakout and the price closed inside, you can see. But around this level, the price broke above the breakout, right? Now, you might not be in this position. You might not be looking for a breakout because the price has rejected a lot of times. One, two, three, four times the price has rejected this resistance level, but eventually price broke out, and it broke out nicely. Now, how do we enter these trades? Because there is no retest happening on the support line. If there would have been a retest, we could have entered a long position right here, but we can see there is no retest happening on the support line. A retest did happen on the liquidity level where the price reached here, but we wouldn't have known, right? Because price action trading tells us that once the resistance is broken and we are looking for a long position, what we have to do is we have to buy at a retest. That's a cleaner way to get a tight stop loss and a really good entry, where your risk to reward is really nice. So now what we do is we switch on lower time frames. Okay, hold on. We'll just mark that first so that we are aware where we are. Okay, this is what we are looking for and how we could have entered a long position right here, right around this level. So was there any consolidation? Was there EMA retest? Could we have entered a trade right here? We'll see that now. And this is March 24. Now, trust me, I haven't seen this. I am seeing this for the first time with you guys. So you can see the 4-hour EMA is getting retested and rejected a lot of times, right? And it is being used to drive the bullish momentum. So this is how EMAs, because you might be thinking, is just a moving average, is just a line. But psychologically, what has happened now is a lot of people are at these EMAs levels waiting to enter, waiting to buy. Okay. So a lot of traders are using this moving averages to buy. And it's proof right here. The EMA is drawn while these candles are formed, right? The EMAs move while these candles are formed. So each candle formed creates an EMA, and you can see the rejections and everything. So a lot of people are sitting on these EMA lines to enter their positions. And if you see a momentum like this, of course, the market sentiment right now is bullish and might not turn bearish until there is some bad fundamental use, which is going to drive the gold prices down. So until that happens, what we look for is we look for entries at support resistance levels. And when you don't have support getting created and price is just making higher highs and higher lows, so at this point what you do is you use EMAs. That's it. You use EMAs to find your entries. Now, how would we have entered a trade right here? On the 4-hour time frame, one you see is there is a low. Okay, we have to understand structures first of all. There is a low right here. The 4-hour was going really nice, but then it created a nice low and it rejected once again right here. And then the EMA retest happened. So whenever I have seen this price action 1,000 times, that there is kind of a support getting created and then the price goes down. EMA acts like a magnet and it pulls the price towards itself. And then what happens is the price retested this EMA and then moved up and then retested again and then moved up, and to finally using these lines kind of a support. For example, if you see this is the lowest of the wick, it has been used as a support and then a large momentum came in. Eventually the price did came back around this level, but it didn't retest that support. This is a smaller support and it didn't retest that support and price continued moving up, rejected the 4-hour EMA. So how do we enter these positions? So if we see on 4-hour time frame, let's say the EMA is right here. I'll just mark this price action. The EMA was right here when this price action was happening, and we need to mark this line so that we can see which last candle happened. And as we don't know where the EMA is going, when I shift to 1-hour time frame, we'll not know where the 4-hour EMA was. So how do we know what kind of entry we are looking for? Let's continue on this 4-hour mark level. The EMA is right here. The EMA is marked and the candle was right here. Now we shift to 1-hour time frame. Now it's easy to understand. You can see this candle was the one which closed on the EMA. And now as a swing trader, I have always said that I look for structures and change of structure and everything on 1 hour time frame. I look my entries on 1 hour time frame mostly. 4 hour is something I rarely use for entry. It's for my analysis and to understand what kind of price action I'm seeing. But my entries are mostly going to be on 1 hour time frame. So we can see 1 hour structure was clearly bearish around here. We'll just draw this so that it's easy to understand. 1 hour structure, this. Okay, this is not a structure. I mean, this is lower high, this is the lower low. So no structure. Then we have, this is just one candle. It's fine to use this kind of structure now. So this is fine. And so because the structure changed, this was higher low, this is higher high. And now the structure is changing again, lower high, lower low. So when there is consolidation, you will see structure changes on 1 hour time frame a lot, a lot. So you can't be like, because on 1 hour time frame, the EMA was retested right here as well. But that's why I told you I use 4 hour time frame for my analysis. I use 4 hour daily and weekly time frames to create my support and resistance, not 1 hour. 1 hour is just for looking entries and local zones from which I would look for a break of structure. Now, this was the support I was talking about, a support being created, right? In the earlier on the 4 hour time frame, this was the 4 hour structure. Now we have this, and then again we can clearly see the price went back above the resistance because first it was support, and as price broke structure, it didn't act the way a resistance would. There was some kind of rejection. You can see the candle closed here and then price went down and then closed up again. That means a lot of buyers came in. Now there is still price action going on, retesting the support continuously happening, and we can see the 4 hour level. The 4 hour level is holding. The 4 hour EMA level is holding, and the price is getting rejected multiple times, right? And eventually, what happens is the price broke structure. Now, imagine entering a trade around here. Would you have entered a trade around here? I don't think so. I would rather enter a trade where I see this as some kind of resistance level. Okay, the price broke recent structure around here. So I would like my entry at this level or I can't enter. It's as simple as that. I can't enter because I would like my entry at this level. So either at this point, I put a buy limit covering the lows. This is the lowest point, not this one. This is the lowest point for me. Eventually, my price will cover around this level, but I would look for an entry at this wick, actually, this wick, and this would have been my entry if I was looking to buy. So let's create a position. I see the wick is right here, and understanding spreads, I'll just keep it a little above. So eventually, we would have got an entry right here. And the reason it is above this level is because a lot of time you see rejections like this and the price will just start moving up. And right here, the distance was very high, but I just want to keep my entry a little above the highest recent week. Okay. So this was the week. My entry would have been something like this, creating 1891 plus, some kind of, yeah, at least 2000. So we have 2000 ticks right here. And I could have looked for 1:2. As you can see, this is the recent wick high and also call it a swing high. But as there is bullish momentum, I would enter a trade where I don't have a specific target. And I'll tell you why. Because a lot of higher highs and higher lows are getting created. That also means fundamentally this pair is in a bullish momentum. So why would I, keep my target locked to something which is not there. There is no structures around, right? There is no EMA coming from top, which is going to drop my risk to reward. So except for this wick, I don't have anything which is going to stop me, right? So what I'll do is I'll use EMAs again to manage my risk. It's very simple. It's as simple as that. I'll use EMAs to manage my risk, and I'll teach you that in the next lesson. So stay tuned. But anyway, imagine I could have, you know, considering how the EMA has moved, I could have locked a lot, a lot. 1 is to 5. So I am able to do this now, but in the past I couldn't have, because now I know how the markets work. I didn't know how the markets worked previously. I have paid for courses and everything, but they don't teach you the way I'm teaching you right now. Trust me, this is all I have learned by myself. No one has taught me this stuff. I have learned this by myself, by failing, by losing a lot of money. And I don't want you guys to lose that money. Instead, you are going to make money by understanding this kind of price action and how you look for entries, how you look for local support zones. For example, right here, even though we had EMA, we looked for a local support zone. This was our local support zone where we could see a lot of wick touch, and then we could see rejections. On 4 hour time frame, we see close of candles. So all you need to do is wait. You need to have patience, and you need to make sure you are entering a trade in which you feel satisfied. You feel you have a good stop loss, not a very large stop loss or something like that, because then your risk to reward is going to get messed up. You should be satisfied with what kind of trade you're entering. So imagine I can say I could have had a target till around here. Okay, till around here easily, and that is 5.71. That is 5.71, almost 6. 1 is to 6. So I'll tell you why as well. I'll leave this position for the next video, and I'll tell you why we would have closed around here at this position. Now, this is how you trade. This is how you look for local support zones. And similarly, if this would have been a short position, I would have looked for a local resistance to look for short. But generally, I don't see like lower lows is created and there is no structure around. That is happening right now on USD CHF. But eventually, you'll find some kind of structure a little behind in history. Though I don't like to use that levels. That's why I use EMAs at that point, because then the history is very old and EMAs are going to give me a faster and a cleaner perspective. So at that point, I use EMAs on the shorting positions, but long positions are very common. A pair like gold, an asset class where gold is generally just moving up, and there are a lot of pairs who have broken all-time highs. And for those pairs, you can use EMAs to enter, because you wouldn't want to stay out of a trade which looks this beautiful. I hope you're getting this. Also, you need to understand there are psychological levels. This is an addition to what I'm saying. EMAs, you need to make sure, for example, let's say I wouldn't take an entry, which is right here, and I have a target of around, 500 or something like that. You will see why, because a lot of times when there is a bigger psychological level coming up, price starts rejecting way early. That has happened a lot on gold. Whenever a big psychological round number is coming up, which is 2500, you will see rejection starting from 2400. This is 2400, and this is where we started seeing rejections. It's as simple as that, that you need to make sure your target is not around some psychological level. Right now, we can see the price moved up. Okay, we don't have history before this, but anyway, we are at 2149 and the price is continuing up, so we don't have that kind of psychological level. You could choose to end your trade by 2400, but that would be a very long trade. So this trade started on Friday, 22 March, and ended on 5 April 2024. So that's like 6 days of trade, and I'm fine closing almost around 1 is to 6 and waiting for 6 days to for that to happen. You know, that's like almost getting 6% in 1 week. Why wouldn't you take a trade like that? So that's one trade. Now let's look at other positions. If you might be wondering, it's easy to see this in history and everything, but to catch that trades like this is going to be difficult. But if you have been watching all my videos, you will understand my strategy of this local support zones, 1 hour break of structure and everything has been working on all kind of trades. Now, understand that the way I create these support zones and the way the price reacts on that and the way the price doesn't hit your stop loss a lot of times is my strategy mainly. And I have shown you countless examples now and it has worked. So don't need to worry about that. And there is a reason because we are not looking for a magical change of structure or anything. We are looking for price action to retest support and then reject those levels. We are technically trading. We are not just following a set of rules. For example, a lot of influencers, what they do is they come to you, they sell you their strategy and everything, but you will never know the reasons behind the confluences, right? You will never know the reasons behind the confluences because they themselves don't know it. A lot of people, they have just bought it from someone else and now they are selling it ahead. But if you don't know this, you will never be able to trade in the correct way because you don't understand why this is happening. Let's say 2 plus 2 is equals to 4, right? That's a fact. But if you don't know why 2 plus 2, the plus means addition, you are just memorizing 2 plus 2 equals 4. But how many times would you memorize all of these words? You would rather be learning this thing, right? Maths is just about understanding how the formulas work and why this formula exists. You know, that you can see there is a lot of formulas in maths, and they also explain how this formula came in the picture. And that is why you also need to understand why are you looking for this kind of price action, because there is a support level, there is a resistance level, and you want to see this kind of price action, you want to see your support level being tested. There should be something fundamental right there behind the technicals. Okay. There should be something fundamental right behind the technicals for you to support, for you to have confluences. I hope you're getting this. So, my strategy is about creating local zones and then waiting for the price to break it. So, a lot of times stop loss will get hit. But I have been doing this with you guys recently in the past few days. I've been showing you examples, and trust me, I haven't looked at these examples before making this video. I'm just doing everything live. I just see on the daily time frame that if we would look for a buy entry right here, and I am showing you the confluences which are almost similar every time. Every single time, every single trade have similar confluences, very similar confluences. So imagine the price action is repeating itself so many times, and you can enter and exit trades based on this. So let's continue on the next price action. We'll move back to daily time frame. So we see again a lot of support, resistance, and everything coming up, and you can see on the daily time frame as well. The 50 EMA is working so nicely, and I would be interested when this has happened, and I'll wait for price action to do this again. So I don't enter on the first time. When there is a rejection like this, I would look for an entry when the price is coming back around this level. Okay, coming back around this level. It might not touch the EMA, but it will give us a good movement. Now, if let's say the price just moved here and then moved below, like it's just retesting again, I will not look for entry. Reason being, price is consolidating and it might break. If there is a momentum, I would only look for entry when there is a momentum of moving away. Now, this is a lot of price movement. For example, This area is 2362 and this is 2457. So it's a good price action. But my target at any point would be 2500 or something like that. Reason being, I know there will be a lot of consolidation at 2500. 2500 is a psychological level, and I don't want to be in a trade where I am waiting for days for price to break above. So on the daily time frame, I see a retest like this and it's rejecting and moving up. I look for an entry right around here. So we'll just mark this level. Let's mark this level and we'll also cut the bars right here so that it's easy to navigate back. Now on 4-hour time frame, you can see the price is retesting the 200 EMA. Now first it broke it, then went on the 50, retested. Imagine the price action on the EMAs. Why EMAs are important? Because it acted as a resistance. It's also acting as a resistance, not just as a support. It's also acting as a resistance right here. The price didn't move so easy. You imagine you are on this looking at this trend line and it took 4 hours. 4 hours you're sitting there and waiting for price action. That's why trading is about patience. You will see price action like this. This is 8 hours of price action now. And then the price, gave you some hope right here as well. And it's 12 hours of price action. And what you'll see at the end of the day is that price didn't give you any kind of entry. So most of the time, price action is about waiting. And also, that's why we create local support and resistance zones from which we want to enter trade. We don't wait for a magic to happen. We want to see different kind of price action. We don't want to just keep looking at the charts. We want to see if there is a level broken and whether we could enter on that trade or not. So for I see there is a structure level right here, support. All you have to do is do a little zoom out and you will find support. You will find support eventually. I can see a line right here. It's 1, 2, 3, 4, 5 touches. But eventually this was not there. But this is the EMA has also acted here and there is a resistance right here. And if I just have to move this a little bit and everything falls perfectly, everything is nice right here. And what I see now is there is a break of structure again. There is a break of structure right here, right? And the price retested on a level like this. Imagine how many times you could have entered a trade on this. If I move this right here, now my only thing was I told you on the daily time frame I'll wait for price action to do this. But even after you see 4-hour time frame, and if you try to move on the 1-hour time frame, the price has retested this. I'll not take this entry, I'll just show you how you could have entered that position as well. It's just for educational purpose. So I can see there is a swing high right here and the price broke structure right here. And I can see there is a swing low right here. So a simple entry would have looked something like this. I can see a clear break of structure. It's happening on New York session. So it's not even Asia session, it's New York session. And a stop loss of something like this. The price gave you entry on 30 July night. And if you're targeting level like this or 1:2, something like that, 1:2 is already right here, but the price went till 1:2.81. So I can tell you how I could have exited this trade right here in simple terms. But I can also capture 1:2 on these trades because this is not a breakout trade. In the previous trade, there was a clear breakout. The price broke a really good structure like these kind of levels. It broke and it was continuously moving up. That was a different thing. Now, this is a range kind of price action. So here, generally, if you see my Telegram updates, I'm a person who would rarely look more than 1:2. So my price action, I would have closed my entry right around here because this is one of the rejection zones. Price generally reacts from these kind of levels and not these levels. Price a lot of times moves here, but a secure profit, a secure target is these levels, these levels, these levels. Okay. So you can see a lot of wicks right here, and also you will see rejections from exactly these levels. See the wick, the lowest wick. You see the wick going till here, exactly to the level I told you, right? This one. So a early close would look something like this. Now this is something I have never told you before. Understand this. This is going to be very important. These levels, which you see, a small support which was used here becomes your resistance for take profit. So right here, it carried a lot of bullish momentum, so price continued up. But a lot of time, price also flips from right around this area. So your target should be this level. Okay, the target should be this level. And you can also look for swing highs like this, but gold, when it starts ranging, it ranges for days. So you have to understand that. Sometimes it ranges for months. So recent range was for around 3 months. And after 3 months, it broke the high. So let's say we are here again in this structure, we can see another break of support right here. And again, this kind of level is used as resistance. Even though the price created a higher wick, but it has been used as a resistance. And there is a retest right here. Okay. So eventually on some time frame, you will find signal of maybe 2 hour time frame. If I just look at 2 hour time frame, imagine this. I count this one. I look at candles this way as well. That I count this candle as 1 hour and this is the second hour. Okay. This is the second hour. These two candles, this one candle and these two candles. So of course, it's an engulfing, right? It's an engulfing. But anyway, on 1 hour time frame, I can see there is a support reacting right here. Okay, there is a structure. This was your low high, this is your lower low, and then there is a structure right here, and then the price moved up. This is your higher low. This is your higher low. And what kind of entry you would look for? Let's say price broke structure right around here. You could look for two entries. One is this for the price to retest. A lot of times this happens, and a lot of times it won't happen. But let's say a simple plain entry like this, and your stop loss is below this level again 2100 or half candle, almost one candle, that will be much secure. 2300 is a good support. If the price comes back, I would like to see some kind of rejections here because the price has rejected from here and then moved up. And then we can continue this up to again 1 is to 2. And if you would close around this level, that's exact 1 is to 2. Okay, let's say this one 1.98, almost 2, that's fine as well. But this is the level, this was the support level where we try to move on, and we can just take exact same high like this, and that's 2.15. That's another trade. And this also closed quickly. This was 8 August and this is 12 August. Yeah, 4 days. That to 2 days is just Saturday, Sunday. So 3 days it took to reach your target. So that is as simple as I can't make it more simpler. This is how you use EMAs to enter your trades. I can't make it more simple. But after you see a retest on this EMAs and you see clear rejections, you need to start drawing your lines. You need to start drawing your support zones on smaller time frames. Sometimes it's not going to be 1 hour, sometimes it's not going to be 4 hour, sometimes it will be 30 minutes. But that's also fine. That's also fine. 30-minute time frame. Don't go on 15 minute. I hate 15 minute. 30-minute is what you would look for. 15-minute is for my stop loss movement, which I'll show you in the next video. 15-minute is for my risk management, and that too only if I am in a trade which is looking to me like a day trade. So that's where I use 15-minute. But a lot of times 1 hour and everything is going to be sufficient for you. So I showed you two trades. I showed you exact same kind of thing we would look for. We look for a break of support. We see another resistance right here. There was another resistance right here, a recent high, and we waited for the break of structure. Price didn't came back to the stop loss twice. I gave you the exact reasons why you would enter this trade, and now you know the price doesn't hit your stop loss so common. When you're looking for a price action like this, but I am also human. I am able to show you these trades right here, but a lot of times I make mistakes. A lot of times I enter too early, right? So that I am also fighting myself with. I That is reduced. That's why I am a profitable trader. But I have to make it perfect. I am also working on that. So even you have to work on these things where you don't enter early. You wait for structure like this. You wait for break of structure like this. This is my strategy, and all of this you're getting is for free. Okay. So in the next video, I'll tell you how to manage your risk. So make sure you like this video, subscribe to my channel, join my Telegram for midweek updates, and follow me on Instagram. Please do all of this stuff. This is going to help me keep producing this content for free. Thank you so much, and I'll see you in the next video.